This line that you see here, going up and down, is one of the most overlooked indicators for Bitcoin. It has accurately called every major Bitcoin cycle in the last 15 years. When it moves up, Bitcoin rallies. When it rolls over, Bitcoin drops. This line right here is the ISM Manufacturing PMI. Now you might be wondering, what exactly is the PMI and why does it have such a strong influence on Bitcoin? The ISM Manufacturing PMI is a monthly survey that tracks whether US manufacturing is expanding or contracting. When the PMI is above 50, it signals expansion as factories are producing more, orders are rising, and the economy is picking up speed. Below 50 means contraction as businesses are cutting back, and growth is slowing. And when the PMI is around 50, it suggests the economy is in a neutral state, so neither expanding nor contracting. Every time the PMI rises sharply from below 50, it marks the beginning of a new economic cycle, like we saw in 2012, 2016, and 2020. This is what's called a cyclical recovery. And historically, that's when Bitcoin tends to launch into its strongest rallies. Why? Because economic acceleration improves credit conditions, boosts investor confidence, and unlocks more speculative capital, all of which are fuel for risk assets like Bitcoin. And the opposite happens when the PMI falls from high levels to under 50, indicating an economic contraction, like in 2013, 2018, and 2021. These are instances when Bitcoin also tends to see its sharpest drawdowns. And this relationship should hold true now more than ever. The reason is, Bitcoin is no longer just a retail-driven asset. Over the past few years, institutional ownership has grown significantly. These players don't trade on hype, they respond to macro conditions. For example, institutional inflows into US spot Bitcoin ETFs surged in the first quarter of 2024, right after the Federal Reserve, the US central bank, signaled a shift toward easier monetary policy through potential rate cuts. BlackRock's Bitcoin ETF alone saw over $13.9 billion in inflows during that period, closely tracking the shift in macro sentiment. If we look at the PMI's recent cycle, it peaked in March 2021 and declined to 47 by late 2022, signaling a contraction in US manufacturing. Since then, the data has been choppy, short bursts of improvement with rallies on Bitcoin, followed by renewed slowdowns and pullbacks on Bitcoin. Today, the PMI is still hovering near the 50 mark, telling us that the economy is neutral. But if the PMI starts to turn up from here, it would put us in the same kind of macro environment that has historically fueled major Bitcoin rallies.